Hello and welcome back to Market Shares. I'm your host, Tony Blodgett, and today I got another awesome conversation. You guys know that I like bringing people on to the Market Shares podcast that are really just friends of mine, people that I really look up to in our industry. And today I have one of those unique guests, and I think we're going to have an awesome conversation. So I want to make the introduction to Patrick Palmer, someone who I've known of for many, many years, but really have developed a friendship with over about the last 5 years or so. We met at a coaching program, and I think we're going to talk a little bit today about, and you heard me talk about this, how relationships in this industry can really help you, both during times of when it's plenty, when times are good, but also during some of the most challenging times in our industry. It's great to have friends around that you can reach out to, that you can talk through things with, and so on and so forth. And Patrick is one of those go-to people for me. So, Mr. Palmer, welcome to Market Shares. Thanks for taking the time out of your day to be on here today.
Yeah, Tony, thanks. So we've had a lot of good conversations over the years about a lot of both simple and complex topics. So thanks for having me on. I'm looking forward to the convo.
Yeah, absolutely. Well, before we get started, I'd like to maybe just do a quick introduction of you. Maybe give us a little bit of background. When I first heard about you, before I even met you, I'm like, I bet you. Me and Patrick have a lot of things in common. Our backgrounds are similar in a lot of ways. We've been through a lot of the same things. So everyone knows my story here on Market Shares. So why don't you give us a quick backstory on your journey through the mortgage business and kind of where that's landed you today?
Yeah, got started in the business right after school. Did a little summer internship at a finance company and got into the mortgage space really young. And then after a number of years as an originator, 10 or 12 years as an originator, me and a couple of buddies thought it would be a great idea to start an independent mortgage bank. No clue what we were doing. We fought our way through it and had some success. And through 07 and 08, through a lot of really difficult times, we ended up selling to a much bigger, better capitalized and more warehouse financed mortgage bank. And ever since then, I've just been leading people and just maintaining my role both in the sales and marketing side, but also operations side for the last, this is my 29th year.
29 years. Yeah. Well, you got a couple of year jump start on me. I think this is my 27th year. So it's interesting that we went through a lot of those past lives together. And when we chat, I know that both, you and I probably both tend to reflect back on lessons learned over the years. I don't know that all of it's super relevant to the challenges of today, because this industry is so unique in that, it's always different, but there's always things that we can look back on, I think, and say, hey, I remember going through something similar to that. And we see companies going through a lot of, I'm sure, the pain that you and I have dealt with, in the past. Right now, I mean, it's unbelievable what's happening in the mortgage industry, and I think that the amount of change is just getting started. I'm kind of interested to see what happens here in the coming weeks in our industry, because as I mentioned on the last episode, I see more and more M&A activity happening as people just are not willing or able to put up with the challenges that this market continues to throw at us. But, I don't really want to go too far down that road on this conversation, because I want to stay up in the realm of talking about things that we're doing really well and things that I know that you do really well. Before we jump into that, though, we were just talking on Friday, and I know you were just on a trip out to Washington, D.C. Maybe give us share with me a little bit about the experience you had out there in D.C. I think it's something that our audience would enjoy, and if nothing else, learn a little bit more about how Patrick Palmer thinks and what's important to him.
Yeah, well, I appreciate that. We had a relative that was buried next to her husband in a funeral service at Arlington National Cemetery, place I'd never been. And you always think about how tough times are and what we're struggling with in our adversity. And when I got there, I don't think I could realize how big this piece of property was, how many headstones are there, how many great American men and women are buried there in service to our country. And seeing the pageantry and going through it. And in that moment, it was once in a while we get handed a moment where we go, I need to be really grateful. like the things that we're facing are tough, and it's been a slog, and it's been exhausting at times, certainly frustrating, and we can get off our game pretty quickly. And in that moment, I just was like, man, I'm really grateful that we're not, storming a beach at Normandy, or giving the ultimate sacrifice for the things that we believe in. And it was just, those little moments for all of us are just like, wow, okay, let's take a step back. Let's realize how fortunate and lucky we are to be in an industry like this that provides so much to us throughout the years. And let's reset for a moment and get some perspective. And that's really all it was. And I can't wait. I haven't even shared that with my team yet. So I'm sharing with you first and on this episode. And Friday we have a sales call every week. And it's like, I'm kind of excited to get to there and just explain some of the emotions I was having and how grateful I am to be able to come back this week and go to work. It was a nice kind of a restart button, so to speak.
Yeah, I can imagine. I've been out to DC a couple times, and there are a lot of awe-inspiring things there. I've not been to Arlington National Cemetery, but when you told me that's where you were going, my first thought was, well, I wonder how impressive that place is. And before I even got those words out, you were sharing with me that story. So yeah, that's pretty cool, and probably something I'd like to maybe put on my list of places to visit if I ever do go back to DC. But to be there for a service and all, like you said, the ceremony around that and what it means, that's pretty cool. I appreciate you sharing that. Well, I want to, I'm trying to think of how I want to take this conversation, because there's so much to talk about. We're going to talk about your Friday calls, but I think before we do that, maybe share with me, because I know that there was a time in your career where you were, like you said, you and some others were running a mortgage company, and, kind of the stress and pressures that, come with sitting in that seat. And conversations that you and I have had over the past, you don't have a lot of desire to be necessarily in that seat. You're in a very important role. You run a really fantastic region. So maybe share with us a little bit about what's changed in your mindset that has allowed you to say, there are places in this industry I could probably be. There's maybe ranks that I could ascend to if I chose to, but where I'm at is kind of where I want to be, and this is why that's important to me. Does that make sense?
Yeah, no, it's a great question, and one that thankfully, due to coaching, I've reflected on a lot. Like, it was very intentional to get to where I am, where I'm sitting right now. And that's not way high up the org chart or anything. It's just based on pure joy. And so the years of running and leading organizations, as you know, Tony, you see a lot. You work in HR, you work in regulatory environments, you work up and down the spectrum, staffing and technology, and a lot of these things which are critical. We need really smart people to do those things. But for me, the thing that I woke up for every day, and the thing that I just put me to bed at night and I slept like a baby, was working with sales and marketing people. Like, how do I help them remove the barriers that are in their way from being a 4 and 5 unit person to a 12 or 15 unit person? And how do I pour into them and show them how to scale organizations and think differently, and how to, figure out what their spends are and ROIs and all these things that I had learned in those roles, but I just didn't want to do them every day. Like, I didn't want to spend all my time talking to lawyers and regulators and compliance people. And that is a lot of the heavy lift in running organizations. I wanted to be close to the street with the people who are working with the consumers and helping make a difference in their lives. And that ultimately, it all boiled down to, how do I position myself so that I'm only doing that on a daily basis?
Yeah. Well, I appreciate you being able to explain that. I think there's a lot of people maybe listening, or that will circle back to this episode, that have not found that, have not been able to identify where in this industry do I really want to be. A lot of people are ascending the ladder, if you will, of this industry, whether it be from originator to branch manager to area, regional, whatever that looks like to them in their world. And they're just ascending for the sake of ascending, right? It just feels like it's the natural progression. So to continue on this topic a little bit, what do you have any advice, or what process did you go through to say, I want to find, like you said, what gives me joy every day versus chasing something that I think might give me that joy at some point in the future.
Yeah, I mean, largely the process was around when I'm feeling anxious or when I'm feeling angry or when I'm feeling frustrated. What are the things that are causing that? Well, okay, it's something like writing a compliance policy. Let's take LO comp, for example, right? We all lived through that changing of the LO comp rule. And I found little joy in it. I had a lot of sleepless nights, and it wasn't because I wasn't doing good, but it's not what I was made to do. So being honest with yourself and looking in the mirror and saying, what are the things that I worked on today that when I walked away, I was pumped? Well, those are recruiting meetings and telling our story and sitting down with an originator and their LOA and figuring out how to hire, who to hire, what's going to move the needle from a sales and marketing. How do I run a P&L effectively? Like, I love financial modeling, and those were the things that I just had to sit down and just write a big list. What gave me a tummy ache today? And what made me really excited? And eventually I started crossing off all these things that I didn't want to do. Now, keep in mind that it took me the better part of 22 or 23 years to figure that out. I didn't know. I was just doing the job the best I thought I could, some of it doing well, other times hiring other people that could do it better than me. But the reality was, at the end of the day, it came down to just making a list of here's what really gives me tons of fuel and energy every day.
Yeah. Well, let's take it down to because I know that you have a lot of branch managers that work for you. I'm gonna kind of land on branch managers for a minute. Because I've had a lot of people over the years that have talked to me that either want to be a branch manager or they're tired of being a branch manager. So when I think about that role in particular, how often do you think that it is that someone had a desire to become a branch manager because it felt like the next logical step in their progression, but that they find themselves either doing a lot of things that they don't want to be doing, or worse yet, not doing the things that are required by that job description because they're not things that they enjoy doing anyways, and maybe should have focused on remaining just an originator, focus on the things that actually bring them passion. And then how do you help identify that and then either coach someone through it or maybe coach them to a spot of, hey, maybe running a branch isn't the right thing for you? And I don't mean to pick on branch managers. It just seems to be a middle ground where I come across it a lot. And partly in today's world, it's because there's a lot of demand on branch managers because you have loan officers that need the coaching, they need the support, and they need it from their branch manager. There needs to be a focus on recruiting and growth because of the overall volumes being down. And these aren't the same tasks, I don't think, that we've really, as an industry, expected out of our branch managers, especially over the last few years when it wasn't as necessary because the branches were profitable. There was an appearance of success without having to do those things. So maybe let's just, and I bring this up for you in particular because I know you're such a good leader of branch managers, and I think it's a topic that a lot of people would like to kind of hear your perspective on.
Yeah, I think as an industry and even as leaders, for many years, we did a lot of these folks a disservice, right? We saw that as the hierarchy and the chain and the way to move up, which was kind of typical corporate America. And we sold that to them. We would take our best producers and we would say, man, you should really be leading other people and teaching them what you do. And there was a time for that. I think that the way that the financials were run and the mortgage banks were run and HR and everything was run, there was a lot less autonomy when I first got in the business. It was kind of run for you, and you were the best producer, and you kind of fumbled your way through it. Well, we continue to sell that as a way to advance rather than maybe some of the things that you're suggesting, which is maybe the better path for some of them was to continue to sell and teach them how to build a team that would enhance their own production, enhance the consumer experience, enhance the way that some of these amazingly built platforms are used. And instead, we kept going further with it into assuming they had the ability to be entrepreneurs. And some of them do. Some of them are really good at running P&Ls and hiring and firing and deploying tech. Some of them are not. We've pushed them into that role as a way to signal or signify advancement. and it wasn't the best thing for them. So I think identifying maybe the categories or classifications now of people that have run businesses like you and I, that could be a really amazing branch manager, somebody that knows the in and outs, and it's not something they're going to have to learn or overcome a wide or long learning curve. And the others, we should really be teaching, how do I scale a production team? Right. And what does that look like? And are teams even the thing of the future? Or how do I scale my business by automating more of it and leveraging technology? Those are the things that we're trying to focus more and more on, rather than just making everybody a, quasi singular business owner as a, P&L operator of a branch. And so distilling those things down and understanding the complexity of the future, I think will have a lot to do with what the future branch manager looks like.
Yeah. Well, look, I sure value your perspective, and I tend to agree with you. I think it is going to be a challenge that we continue to go through, I think, as an industry, because I think we do need, and when I say need, I mean we need our branches to be profitable, which therefore means that we need to get more out of the branch managers that are running them. And you're right, there does have to be some expectation of really being an entrepreneur, running that like a business. And some of them, I quite frankly, I have some managers that I've talked to and said, hey, these are a few additional things that I need to get out of you and or your branch. And they said, well, just quite frankly, Tony, when you hired me for this role, I actually indicated to you that those aren't things that I want to do or that I'm good at doing or that I enjoy doing. And I have to go, you know what, they did, And so I think you're right. I think we've kind of put some of this responsibility, or we've kind of changed the target a little bit, right? And I don't know that we did it. It's just that we need, the market has shifted. What makes a profitable branch is different today than it was, requires more oversight. And I think we're expecting the branch managers to just know how to do that. And in many cases they don't. And, I think we either need to help them identify that, well, then maybe in this new world, to your point, shifting our focus and helping you build what you really do want to build, which is a production team that's built around you and your successes as an individual. And maybe, dismantling that branch, doing something different with that branch, or creating a different sort of training for managers that do want to learn what's necessary to really run a branch like an entrepreneur. So I don't know that we're going to solve it on this podcast, but I think it is an interesting topic that as an industry, I'd like to see more people talking about and trying to come up with solutions for. I'm sure some people have come up with some good solutions. I'm sure others are dealing with this topic because I know that it's got to be relevant around our industry right now.
Yeah. One of the things that I think about frequently is, look how much we're asking not only branch managers, but originators to do. We're asking them to be masters in marketing. We're asking them to be masters in guidelines. We're asking them to be masters in technology. We're asking them to understand and do all these things. And, when I first got in this business, I took a handwritten 1003 on a piece of paper and handed it to somebody and collected some documents. Now we expect them to, have these elaborate CRMs and marketing automation and social and digital campaigns and build a personal brand and understand so many products, right? And the calculation of all of those guidelines of documentation. And I started to think, okay, how are we going to equip the future branch manager to do the things that we've just talked about? But also, how are we going to equip the originator in this land of complexity, and us asking them to be all things and be really good at all of them? It's something that every leader that's listening to this podcast, whether you're a branch manager or way up the chain, is how are we going to equip people to handle all of the things that we expect them to be experts at?
Well, it's a really good question. And I think that we need to figure out that answer because they need it. If we're going to expect the model as we know it today to continue to be successful, and by model, I mean, having that branch manager with originators under it and that expectation, we got to figure out a way to train them and to teach them. I think part of it comes with scale, because there is no margin. The margin's not coming anytime soon, meaning there's no extra money, if you will, just going to come out of nowhere to be able to hire more trainers and come up with these curriculums and this program and the things like you're talking about. But I think where it hopefully will come from is from scale and from size. And I think you're starting to see that with this consolidation I alluded to at the beginning of the call. We're going to see a continued level of consolidation in our industry. And hopefully through that comes, the companies that are having the growth and the acquiring, if you will, recognizing that, we do need to maybe, now that we've amassed some scale, we have to invest back into our people and their development in order for this industry to continue to produce the kind of high quality loan originators that I think we've become accustomed to, or at least people that are high quality given the demands of today's mortgage market.
The point that gets lost a lot in consolidation, mergers, acquisitions is that you're not just getting production. Like a lot of times what you're getting is subject matter expertise. Right. So there may be a person on that team that really understands how an LOS ought to work and the efficiencies that can be gained. And I think you're right. There's a lot to be said without going into too much detail about the consolidation space, that you don't just get production when there's consolidation of companies. You actually are melding a lot of, mind share together, and you're gathering subject matter expertise from people who have done it in a different way that maybe you haven't thought of, have done it on a different platform or a different tech that can be translated into what your company does. I think the point worth making here is that can only be done if you're willing to put your ego aside and say, really question, like these companies that are doing the consolidation are going to be forced to think about, just because we're doing it this way doesn't mean that it's the best way. Somebody else, even if they're from a smaller company, may be doing something that's better that we ought to look at. And I think that is where the companies that are consolidating and growing from the consolidation in ways other than just production and volume are going to benefit in this market. And you're right, some really amazing things can arise from just putting really smart people in rooms together that have worked across a multitude of platforms and tech.
Yeah. Well, you're absolutely right about the setting your ego aside. And I don't even know if it's more, I don't even think it's setting your ego aside. It's being quite intentional about uncovering what are the best people at whatever size the company was is completely irrelevant, but having a process and really a knack for looking for those people within those organizations that had really bright ideas. And even though the company, for whatever reason, didn't go on to the next step, and let's just call this out, there's consolidation happening, not because people are broke and they have to get out of the mortgage business. Some people are just, quite frankly, tired of the grind that is the mortgage business, or some of these are, it's a part of a company. There's a larger company and they're getting rid of their mortgage, their retail origination arm. There's lots of different reasons why. So whenever I think about M&A, I want to be careful to say it's not that, they couldn't make it, or they were forced to sell. Some are, but some aren't, and some it's very strategic, and they got to where they were because they had smart people. And I think that companies that are acquiring, to your point, can't just be so rigid in how it is they do things today, thinking it's the best, and really have an really look for those people that might work for the company they're acquiring that really had great ideas. And I know for a fact that there's small, any company who's in business today that has made it through all that we've been through, they're doing some things right. Absolutely. Even if they're getting to the point now where they're deciding not to move forward for whatever the reasons might be, they've done a lot of things right to get where they are. And chances are there's some very brilliant, bright people on their team. And one other thing that I'll tell you about having an acquisition be successful, it's not just identifying those gems. It's sometimes it's not the top salespeople that's the glue that holds an organization together. So you got to look deeper than the production, for many reasons, in my opinion. But anyway, we keep going back to mergers and acquisitions, Patrick. Maybe it's because it's so prevalent in our market space right now.
Going to continue for some time, seems too, right?
So I want to, it's going to. Okay, so I want to pivot a little bit and talk about coaching. And you and I met at a coaching program. We met at Building Champions Masters Coach program, which I was so grateful for. I met a lot of people there, but you were definitely one that I walked away from that with a good friendship, in addition to the time that we spent together at the Masters Coach. But maybe if you could just share with me what coaching has meant to you over the years. Is it something you've always done? Is it something you're actively doing? And what sort of advice might you give to, say, originators or branch managers that are thinking, coaching's probably not for me. I don't know that it could be useful. Like, did you ever embody that mindset, and did that change over time? So maybe just give us a little bit of your perspective on coaching and what it's meant to you, and what it could mean to others.
Yeah. So I think my first coach was in 2000, the year 2000. I went to a Todd Duncan event, and the Building Champions folks were there, and they had a booth. And that's not what started. I saw them and I had a recollection of it. But the company I was working for at the time with First Horizon Home Loans, and Jerry Baker was our CEO at the time, and he started to implement an internal coaching program. And for me, I knew that having my branch manager as a coach or somebody inside the company, I didn't know if that was going to be the best fit for me. So I said, but I still think this is great. I had been an athlete my whole life. I had played small college football, and coaching and strategy and how a team is run. That's always what I had known. So I thought to myself, well, if Michael Jordan can have a coach, clearly I'm not so great that I ought not have one. I checked into it. And I never looked back. Like, I probably never start a company. It never survives. It never becomes something that the acquiring company is proud of without it. And largely because of this, I learned really quickly that the communities around coaching program are as valuable as the coaching itself. So me meeting you, me meeting people like Ryan, like over 20 years of coaching, I've met so many incredible people that have shortened the learning curve of this business for me. And without them, truly, and the guidance of making good decisions versus bad decisions when you don't know what you're doing, or you don't have the right amount of data, or you haven't crossed those bridges before, ultimately, that's what coaching did for me. A lot of people will use it for accountability. A lot of people will use it in their lives as well. And that stuff has always been very valuable to me. But the community in coaching has always been of the most value, because I could pick up the phone and call 3 or 4 other CEOs of much larger companies, and they would all share with me. I found there to be this spirit of mentorship of, I've learned all these tough knocks. This person is part of our community. And even though we're competitors, you and I share all the time. Hey, how are you facing this? And what are you doing? And there's a lot of amazing people in our industry just like that. And they typically share the same mindset when they're coached. But that, I never really looked back after that. And it was just always a part of my life, because it was always a gauge for me to check, is what I'm doing, even though it might feel good or feel right, is it really the right thing to do at this stage in the game? That was probably the biggest benefit of coaching for me.
Yeah, and I think for loan officers, the same thing could be true too, right? I mean, I think there's a network that can be developed around coaching and the ability to reach out and mastermind with people. I mean, you and I, started a mastermind group with a bunch of people from that coaching program that dissolved, right? So and things like that kind of ebb and flow, and I'm sure we'll fire something else up, or we all showed up at the reunion for that. So there definitely has grown a community around coaching, and I think that is a huge aspect of it. And the reason I bring it up is because I've talked about a lot on this program, because I've seen the most successful people that I know in the mortgage industry at one point or another, or even throughout their career, have invested in coaching. And I think that it is important, and something that a lot of people, maybe newer loan officers, really don't see the value in. And yet I think if you look at the most successful people, they'll all look back and say, you know what, maybe I didn't do it all the time, but there's definitely a time where coaching was helpful to me. And I also think that if it's a financial thing and you can't afford to invest in coaching, there's lots of other ways to plug into a mentor, to reach out, ask for, ideas, collaborate. Like I said, start a mastermind, get a couple of people in your office together, whatever it is that creates that community around learning, around sharpening each other, getting better. That's really what I heard you say you got out of coaching, even though that was more of a formal coaching program. You can create that even if if it's something you need to create amongst a couple of your peers in your office, as an example?
The one thing that really helps from an originator perspective, when I was originating, I knew that I had that coaching call every other week, and I knew that I had these events with other people every quarter. And I think in Daniel Harkavy's book, he calls it the drift. And it's easy to kind of, when the market is really like hard, like it is right now, to give into the notion that what I'm doing is not working. I'm not getting any more deals. There are no deals out there. So I'm going to stop doing the disciplines that I'm used to doing every day. And I think coaching for me, no matter if the market was really great and I got off of some of those disciplines, or the market was really bad and I got away from some of those disciplines, if I did that, I didn't get too far away from it, right? I didn't go 6 and 7 and 8 and 10 months without my disciplines, because I knew that I was going to have a call every other week, and it was going to come up and it was going to be right in front of my face. So from an originator, yeah, you can do that with a mentor. You can do that with a group, but any type of community will help you avoid that drifting too far away from the things that you know will make you successful, even if you're not monetizing them today.
Yeah, 100%. Well, speaking of weekly calls, I did want to bring up your call that you mentioned earlier. And I've heard you talk about before, you guys do, and maybe you do more than just a Friday call, but I know you do a Friday call, kind of a check-in accountability with your sales teams. Maybe share with me, well, and maybe just on a bigger scale, Patrick, like this has been a difficult, 24 months for originators. It's been difficult for all of us, but I think about the originators out there. It's really been a challenge. And so maybe talk about your Friday call, but also how have you worked with your originators specifically, or your branch managers in support of your originators to, get through this challenging market, to keep their head up, to stay positive about the market and the activities that they need to do, knowing that there's a whole lot less business out there. It's not even always that they're not trying. I mean, it's just, there's not a lot of business to go around. So how have you kind of embraced your sales team through this journey? And then share with us a little bit about your Friday call and what that's all about.
Yeah, I mean, the Friday call is really a way for me and the team to not drift too far away from the things that we're trying to do, right? Which is prospect, put our systems in place, make an incredible experience for the consumer. And it comes down to a couple different things when it's really, really tough. We have to do this when it's really busy too. Like during COVID, we had different challenges, but we really addressed them the same way. Number one, we try to bring each other back to the present moment. Like, I know this isn't going to last forever. And so if I just stay focused on today and I can accomplish the disciplines that I know will make me successful tomorrow, even if it doesn't happen in this moment, I can always pull myself back to the present moment and not get too tied up in what I did in the past, or, this may never be good again in the future. That stuff ties up a lot of mind space, a lot of energy. So bring us back to the present moment. Number one, we try to make sure that everybody has something that they understand in their personal life that can affect them at work. If I'm not sleeping at home, if I'm not exercising, if I don't understand how to manage anxiety or stress, or manage things going on in my personal life, then that also affects work, and vice versa. The things that I'm doing at work and I take them home, now everything is in chaos and you really can't focus and be well equipped. And then the last thing that we do is we try to make sure that everybody has a platform that's done in the right way around accountability. So at the end of every week, everybody tells how many leads they had. A lead is nothing more than a name and a phone number, right? So we're going to have success around leads, even if they're not monetizing, because I can tell you that we've pulled more credit reports in the last 24 months than we've done in years past. We just haven't done the same amount of deals because of the market. Well, that's external to us. The other thing is how many deals we've funded. Now, I think we go about it in a different way because of coaching, and that's to just take somebody and hold them accountable to some random metric that means nothing to them and kind of give them the old carrot and stick deal is a flawed basis of leadership around accountability. We sit down with our people and we say, look, let's write a life plan, let's write a business plan, and we want to help you do the things that you tell us you want to do out of love, right? So there's no shaming or browbeating. It's, you told me you wanted to do 20 leads in a month and you wanted to fund 3 loans a month. How do we do that? Well, we got a plan. We know you got to make this many phone calls, this many letters, this many whatever. And we just will do that as a community for one another. And so it's the ultimate accountability call without any shaming or browbeating or somebody feeling like they don't have to, they don't want to show up. They want to show up and say, it was a tough week. It was a tough week for all of us. But hey, I made all my calls. I got 9 leads, and they may not turn into a deal for 6 months, but I know that I did what I needed to do today. That's essentially the crux of the phone call, is to just keep it moving and just, put one stone on the foundation at a time.
Yeah. Well, I love that. I love, and I think a lot of that comes from building champions, right? This idea of, setting your own life plan and business plan, and then surrounding yourself with accountability to help you reach the things that you've already established are important to you and your family. And that's what it sounds like you've kind of built this call around. And I love that fact, because some people don't want to be held to someone else's metric of what they think success is. But I can appreciate that, right? I'm probably one of those people. I'm more of a building champions, coaching program, where it's like, hey, I want to do the things that are going to fit into my life. I want to be successful, and I would like the accountability, but I want to be part of coming up with what that roadmap to success looks like, and then surround myself by people who understand how it is that I work and the things that really motivate me, and then, kind of give me support that is in that same vein, if you will, right? Like kind of like know my love language a little bit, right? So that you know how to put that discipline in place, if you will. So I love that. But it's called, what's your call called on Fridays?
It's called Coffee for Closers, affectionately, and taken after the Glenn Ross, famous movie. And so it's nice. It's nothing like that environment, but it's funny because everybody kind of vibes to that brand, so to speak.
Yeah, I was going to say, I mean, it sounds like it's the opposite of the environment in Glenn Ross, but yet it's the same sort of idea. I absolutely love that. All right. So as we kind of come to a close here, I'd like to know what your opinion is on what are some of the biggest challenges and opportunities right now in the mortgage space. And let's start with challenges. We've glanced on a number of them, but if you had to like put your finger on like one or two of the biggest challenges that the industry as originators, or even as companies are dealing with right now, what do you think are the biggest one or two things going on in the mortgage industry from a challenge perspective?
Yeah. So number one for me, and the thing that I'm probably putting the most effort into, is really how do we rescale this thing when the market does turn? I don't know that margins are coming back. They may or they may not. But I think we talked about earlier, the notion of throwing a ton of bodies at something to make it more scalable, I don't think is a sustainable way to go about this for us in the future. And when it does come back, I don't think it's going to just flip and do a 180 and be full on gas. I think it will be kind of steadily get better and better over time, and the markets will kind of heal, and we'll get back to a number that's sustainable. But I think scaling to it is the thing that I'm working on the most. Having 5 and 6 person teams for an originator and trying to operate on the margins the way they are, I don't think works in the future. So I'm spending a lot of time solving that puzzle with a lot of different potential answers that'll take a lot of testing to figure out if it's going to work or not. But I think that's where the hard work now will benefit us in the future. The second thing is, how do we create a scenario for loan originators where they get to a lot more prospects in a less amount of time? I truly believe that the days of having a one-on-one coffee meeting with a real estate agent was the way to build business. I don't think that can ever be sustainable again. I don't know that you can have enough coffee meetings to get enough deals to sustain yourself without burning a hole in your stomach. And so casting a broader net to the right group of people, generating enough prospects, and then finding a way to use technology to automate the management of all of it, I think is probably the only way that people are successful that want to do significant volumes. I think you can do 1 or 2 deals a month for the rest of your days and go about doing business that way. But if you're used to being a 60 or $80 million producer and you want to continue to do that in the next couple of years with the markets the way that they're going to be, you're going to have to find a way to get a hold of more people, which may mean more state licenses, more technology, social media, but you got to have to cast a much broader net to get to more people at one time than one-on-one meetings. So for me, those are the 2 things that I'm trying to solve, and that's about all the bandwidth that I have. I'm sure there's a number of things that I could try to attack, But I figure if I get these two right, we'll have enough time, money, and resources to attack whatever comes next.
Well, I love those answers because they're right in line with what you said are your passions, in this industry, right? I mean, that's like literally right down you couldn't be more exact in the things that you're focused on. Let me ask you about the first one, if you don't mind. I think what you're saying is that in this next cycle, as things pick up, doing the amount of volume that we did in the past, or let's say the amount of volume that's going to come, we need to find ways of doing it with less people per transaction. Is that essentially, just really getting those because the margin's not going to really allow it to work the way that it did. So how do we create the efficiencies that allows us to put up this, the numbers we want to put up, or let's say the numbers we did in the past, but do it with less bodies having to touch each one of those transactions. And that's more of an efficiency thing. It sounds like how you scale your team properly. Do we leverage technology in order to do that? Right. Did I get that right? Is that essentially what you were saying?
Yeah, the only two things I would add is I think there's going to be maybe a shift in order to do that, or at least for me, of how do I maintain culture while standardizing some more of the process and potentially even centralizing it, right? So if I have a workflow and a checklist of something that can be done by one person, can I create an assembly line that's more efficient than each originator having 4 or 5 people working on the same things?
Okay.
And that's a shift emotionally and psychologically for a lot of originators.
Yeah, well, I get that. That's exactly conversations that I've been having recently, to be honest with you as well. So no surprise there, but yeah, and I can see that there's going to be some challenges in that, but I think that it's something we probably have to do. And I think that to anyone, it does make sense when you can really break down, hey, here's the tasks that need to get done. Here's how we could automate them and centralize them potentially. It's going to save you time and money, right? Save the process time and money, et cetera. I totally get that. The second thing that you mentioned, reaching more people, does that really lend itself to kind of, it sounds marketing-ish, but it also sounds like leveraging technology, CRM, kind of finding more ways of not only getting your message out there to a wider group, but then also being able to follow up and build deeper relationships with a larger group. Like, is that heavy on the technology side, do you think? Is that where your mind goes with that? Or what are you thinking when it comes to scale out your message to more people, even across other states and whatnot?
Yeah, so I think the use of video and leveraging video and virtual classroom, or even if you do it in person, there's going to come a time when one-on-one coffee meeting versus 20 real estate agents in a room, there's a big difference. And like using things like video, virtual classrooms, and teaching classes to a much broader audience, but also then going back and using things that are more tech-based, like social and digital media, to create awareness to a much broader group and figuring out how to pinpoint it and be better at it. Let's face it, I'm 50 something years old, and I'm being taught by my 19-year-old daughter how to do certain things that are so far out of my comfort zone. But I know that if I want to be around in the future, I'm going to have to leverage some of these things just to get more eyeballs on the great things that we're doing with our groups, right? And so it's all of those things in some combination of, but I think you're definitely going to have to get in front of more people, whether that's with video and virtual classroom or in person in a classroom or at events than maybe ever before if you want to gain more deals and more leads.
Got it. All right. So my last question. So those were two, of the challenges that you're tackling. I love that. What about opportunity? What do you think is the biggest opportunity, even though this is a challenging market? If you're a loan officer, a mortgage company, a branch manager, wherever you want to take it, what do you think is the biggest opportunity right now in the mortgage space?
Filling all the gap where there's been all the exit. And I honestly feel like this is something that is really hard to teach because we've been through it. And I saw what happened in 07 and 08 when we kept investing and kept gaining retail branches and people. And you just think you're investing and spending and it's not paying off. But if we do what we're supposed to do now, and we realize that some 80,000 people have turned in their licenses, when it turns around, you won't know it till it happens. But when it does, you'll be thankful that filling the voids in these pockets and the vacating of the market is going to be a huge upside. And I don't think it's as far away as it feels maybe right now. For instance, banks are backing out of certain products. Banks are backing out of certain things like construction lending. The landscape is shifting. And if you just keep working and fulfilling those disciplines daily, when you slide into one of those gaps and fill that market share void, the potential upside is massive. It's very exciting. Hard to see if you haven't been through it before and been the beneficiary of a massive upswing when the consolidation benefits you.
Yeah, no, I love that one, Patrick. And, you know, I spoke just last week about some of the things that banks are doing. And it's funny how we see what's happening, you know, one week and we're like, I can't believe that they have this product or this rate they're giving on this, you know, particular thing. And we're like, oh my gosh, they're just going to dominate us. And then like 2 weeks later, it's literally gone. They've stopped doing the product altogether. Like people don't realize, I mean, you really got to, you know, kind of pull yourself back and look at the landscape and see that, you know, banks and credit unions, and they do this stuff all the time. But it's hard when you're in the middle of it. You know, it's like seeing the forest through the trees. You're like, oh my God, you know, this credit union's going to just, like, do you think they're going to go to like, you know, 85% market share because of their 7-1 arm that they're offering this week or something, you know? But people get so tied in to those little things, and it's distracting, I think, to them. But you're right. On the other side, you see banks pulling away from certain products. You know, a lot of the non-QM lenders I'm seeing, you know, kind of try to back up some of their stuff, and the list goes on of changes, and it's all very temporary. It's all very transitory, and things will settle down at some point. And like you said, if you can fill those gaps, I think it is one of the biggest opportunities. I think there's still quite a bit of disruption to come to the mortgage industry, even as things start getting a little bit better as we move through 2024. I don't think that the shuffling of the deck is over yet in the mortgage industry. So we'll see how that plays out. I think there's huge opportunities there potentially. If you're someone that's looking to grow, there's always an opportunity in disruption, right? For somebody. So well, awesome. Well, Patrick, I appreciate you coming on here today and having this conversation. I'm been a little bit under the weather, so you know, it's just good to get back in the chair, and I didn't want to miss this conversation, but I know you were just traveling, so but I appreciate the fact that we got to fit this in here today and have this conversation. I think this is something that hopefully branch managers, loan officers alike will go back and glean something from for their teams. There's a lot of lessons to be learned from having a conversation with someone like you. And I always value those conversations. I hope our audience did as well. And I'll definitely have you back on at some point. I think that your perspective is always great. And as we get through this season, if you will, that we're currently in, and we get on to the future, I want to go back to some of the opportunities and challenges that you saw and see how it is you guys came out with those things, how it is you were able to pivot. Because I have no doubt that you'll find solutions that work, and we'll want to come back and share those with the audience. So I appreciate you, my friend, for taking the time.
Thanks, brother. I love the show, and I love what you're bringing to the industry. Keep it coming, my man. It's good stuff.
All right, will do. Take care. And for those of you watching, please, you know, tune in. This episode drops on Friday, every Friday here on Market Shares. So please like and subscribe to the channel. And if you have a guest, or if you have a topic you'd like us to cover with one of our guests, please leave it in the comments down below. We want this show to provide content that you think is valuable. So getting your feedback is always helpful. And until next time, take care.